What's going on, everybody? I'm Susu. For those of you that don't know, let's get this situated a bit here. Sorry about the issues with the audio for a moment there. So check this out. We're looking at this market. We're seeing all red. It makes total sense. And this is why I look at something like that and say it makes total sense. Besides the obvious fact, which is coronavirus, it's killing everybody. You know, not everybody, but it's bad. I mean, you got like a 5% kill rate, 4.9% kill rate, which is absolutely atrocious. Like an 11% kill rate in Italy, so on and so forth. So it's really damaging in terms of what it's capable of doing to society. But even when you look at charts, you can always find things that seem very telling. And one of the things I saw when we're looking at the Dow Jones here is that it just can't break that line. And you guys remember when I was saying going back to the middle band, I was saying that like a week ago. I was saying, you know, you bounce from here, you got to break this line, you break this line. And a lot of people were like, bullshit. But it did. It went there, then it broke that, then it broke up, then where'd it get to? Like I always say, that middle Bollinger Band when things are bearish is a nightmare to break. You can see right here where the market's attempting to break that. I use Dow because even though it's only 30 components, it's very powerful companies capable of turning profits. It's something we can look at. It's not as much speculative as other things are, right? And just look at that. Just goes to it, can't do it. Drops down back to the EMA lines, then goes to it. You can see my rolling line there. And just imagine that candle right there. And then that one, it goes back down to the EMA right here, and then back to it, getting squashed in the EMAs until finally it just gives up. And when Trump warned everyone there's going to be pain over next 2 weeks and be very painful, he wasn't just saying for families that are going to lose people, for people that are going to deal with, in terms of potentially getting sick and dealing with the virus. He's talking about the economy is going to get worse. He probably knew DeSantis was going to shut down Florida. Florida being one of the biggest economies in the country. California by far being the largest. California has a massive economy. Bigger than most countries on earth. I mean, so many countries don't even compete against California. So when you look at that, I mean, when I say most, I mean in most countries on earth. Probably like 85% of countries on earth don't even come close to California, or maybe even more than that. Probably more than that. Like 90% of countries on earth don't come close to California's GDP. Hey Siri, what is California's GDP annually?
One moment. In 2018, the GDP of California was about $3 trillion per year.
GDP of California. Hey Siri, what is the annual GDP of Canada?
Here's what I found.
Let's see here. Canada's annual GDP for 2019.
I found this on the web.
Annual GDP for Canada 2019.
I found this on the web.
Shame on Siri. Oh, 1.64 trillion right there. Real gross domestic right there. 1.64 trillion. I needed to just see that. So I just wanted to show you guys that the GDP of Canada is only half that of California alone. And there's the catastrophe, right? There's the catastrophe. When you really don't get a gauge on it, there's the catastrophe. A single state that's already been shut up, and then you look at New York, Florida. Florida probably has like a 1.8 trillion. I mean, who knows how much money Florida, New York, Texas, and California make together? It has to be just a massive amount of money. So when now you see them four being locked up, it's so bad. It's so bad. And I know this is obvious to everyone, but when you're looking at charts, you can learn a lot about why things are the way they are. And you could see the rise back up to that middle line really wasn't anything but just a bounce to get some of that recovery going so that the guys who own the majority of the shares could peel it off to us. The banks knew if they just bought into their own stocks, essentially they could be buying from their self just to trick you to think it's going to be a rebound, only to peel it off to you in spectacular fashion when the time comes. And they do this all the time. It's called running up the price. It's where you buy from yourself, knowing that if I have 1,000 shares of something, okay, and I put it for sale let's say like pre-market, they love to do this. People love to do this in pre-market. It's manipulating the price, but they do it all the time. And it's just essentially squeeze shorts. But if you take 1,000 shares of something you own and you sell it for 5-6% more than what you bought it for, and then buy it from yourself, well, look what just happened. You just got the 5% gain because you bought it from yourself. So it cancels out. You've gained nothing, you've lost nothing because you just purchased it from yourself. In the end, though, you're making people pay attention to it because they're going, oh, wait, it's up 5%. What's going on? And then what happens is shorts start to react to that, going, why is it moving? I don't want to get squeezes. So they start covering. So this is where you see these attacks and manipulations in early market, pre-market. Right there, it starts at 6 in the morning. And you just see it and you know something's up. And sometimes that's all they need to get something going. But let's get in and away from that. That's kind of like just basic stuff that probably a lot of us know. Some of you guys probably don't know stuff like that. You should really pay attention. And level 2, you can see a lot of nonsense taking place, especially after hours pre-market. All right, so let's go to something that we really want to take a look at. It was a stock that I saw today. CEMI. Now, the reason why I love this stock was because it taught people a lot today, and I was really able to educate people quite a bit. Early on in the day, I had, if you were to go to my stock twitch, which I'm not going to do, right there, matter of fact, here's one. You can see it right there, center, you see right there, 3:41 p.m. That's where I'm saying to someone, I don't know, 7:40 is where I would have sold, because that's where I want to, right there, you can actually see right there, 12:46. You can see that was my 12:46 post right there. And I'm just basically saying, look, watching for daily pressure. I'm watching for the daily pressure around 740 if it can get there, but I sell out of bounces usually after 4 or 5% returns. And I do. I actually don't make as much money as people think. Someone might look at my stuff and go, wow, this guy's making huge money on every trade. I don't. And in fact, I should also mention to you guys, just so that you know, I'm also now unemployed. So this has totally messed up my life. Everything. People are just having a disaster of a time. So many people are going to have this problem, but I'll be fine, and I'm sure a lot of you guys will be too. So if you find yourself in the same boat as me, just know I love you, I care about you, and I hope everything works out. And I'm going to try to. That's why I do what I do. I'm homeschooling my kids and having the time like everyone else is having. Things are not easy out there, and I get that. And so that's why I scrounge the best I can for what returns I can get, and I try to illustrate how I'm doing it. Hopefully I teach you guys something in the process. You guys really should look at my stock twits feed of what it used to be. I would put every little thing on there, but lately I've been treating it like I'm building a textbook. If you go back and look, you'll see it's very, very illustrative. I've put chart snaps with arrows, lines drawn, explain stuff thoroughly. I do this so that you guys could possibly learn something. And someone said something to me that just exactly why I do it. He said, thank you. You are a good man. In fact, I believe it was this gentleman right here, SK77777, which I love that. I believe it was him. Who said it. And it was just awesome to see. Matter of fact, I'm going to go back right now to see. I don't know. I don't know if it was him. I believe it was. I hope it was. But yeah, it said that, and I just thought it was really awesome for... Oh, right there. Yep, there he is right there. Look at that. You're a good man. And when I see stuff like that, it really makes my day, because it's like, look, there's something I do this for. But I don't do it for money. I don't make any money from you, and I'm always the kind of guy, I don't pump stuff. I lay out all the technicals. I lay out fundamentals if I know them. I do this stuff because I want to see other people succeed, because I know there's going to be people who could use money right now. Hopefully they get some. So when I drew this picture, and then look what ends up happening. So I draw that picture. I point to that line. Now watch this. Look at the number I have picked out there. 7:39. It's at 12:46 p.m. Let's go back to the chart and look at that right there. Now that's the one. Now I get all this stuff happened right here. I get all that happened. I totally understand it. I'll show you why it happened in a second, but this is why I sold. But look at that right there. Right there. That bad boy right there. That is 737. Okay? That's 737. This is, you saw when that happened, you could not see when that happened. What I would have to do is I will have to go into photos and literally show you. Look right there. So I took a picture later on at 1:41, which you can see at the top of my screen there. I took the picture because I wanted to show you guys, because now you can't see it. And that's why I tell you guys, the lines that I deal with evolve. And what that means is it evolves because it changes with time, with volume, with price. So many different things go into exponential moving averages, in addition to having, pumps and drops throughout the day. When that happens, it drastically changes those lines because it's so attached to the volume. And so when you see that, someone like me is trying to express to you, hey, be careful, because the lines I'm showing evolve. So if you think that I point out at this time, that's where I'm going, I'm not necessarily pointing at the price. I'm pointing at the touch of wherever that price might touch, and back to those lines specifically. I love to see stuff get embedded within all the lines, the 3 lines I use, the 7, the 5, 7, 9, sometimes the 6, 8, 10. I love to have a stock price fall within those, like pretty much to the blue one is my favorite, because that means it gets down to the bottom of the 3. And so looking here, so let's go back to that picture right there. You see exactly, it did literally exactly what I wanted it to. We went right to that line right there. And then it fell back down. And that's why I said I would have sold there no matter what. If you're able to hold to that price, sell there. And I get it. It went to 780. And people are like, but I would have lost 40 cents. It's okay. Because look where it ended the day. It ended at like 685, 690. So you would have made out drastically. Because remember, we're talking about a buyback in at like 640. So going back to 740, that's $1 a share. 300 shares, that's $300. That's a fantastic payment for your time in a single day. Especially if you made like 1,000 because you could afford that kind of money, which I don't make plays like that. I don't buy 1,000 shares of stuff like that because I don't put all my money in one basket. I do the little bits here and there, like I did with Target. I went to like Target. I saw a perfect setup in Target. I was like, oh, I'll jump on it for $1. I got that in like 10 minutes. So the point is that when you're looking at that, how are you as an individual going to spot something and say, how do I do that? And this is what you look for. I'm going to show you something right after this. So CEMI on the 5-day chart, this is where you see it. Keep in mind, I have the EMA, as you can see right there, 579 set. I have my Bollinger Bands set, and then the Bollinger Bands being these lines out here, and the middle line, the middle red line going through. The EMA lines being the lines right here, the blue, the green, the maroon. And the reason why I say, look, see how this became embedded? And that's what I told you guys at the beginning of the day. I told you that. It was trading at like 750, 760 or something like that. Way up there. Possibly almost 8. I forget. It was somewhere up there. And I said, don't chase this. If you don't like to chase it like I don't like to chase it, don't play that game. Because you can get caught in a nasty situation, and then you're going to try to average down. You may average down too soon, and it may literally never even come back to your average down price. You might find yourself getting emotional. So stick to a game plan, because there's always other ones you can watch. Set up alerts like I do. And so what I'll do is I'll isolate a price range like that. Like it wouldn't be, mine wasn't perfect. Mine was on the red line here. Okay, mine was on the red line here. And the reason why it was on that line there was because that line there I had already saw on the day, pretty much it was coming towards that line. And that put me about 650 is when I started getting alerted. Okay. And then what happened is when it went to 650 and it bounced back up, that's when I bought it. And then it went up and dropped back down. It fell actually below, like down to 630 or something like that. So obviously I was like, oh man, I'm going to lose on this. But then it came back up. And so you see it went like this. So here it comes up and then I get it. And I'm like, oh, look at that. And then it drops down very fast. And I'm like, oh man, am I about to lose on this? But no, the blue line catches it and then gives it. And then that's when I get out. Boom. Not even there. That's where it went to 725 the first time. Mine's like here. Like in between here. Like 704, 705. So the point is that when I do it, it's for a specific reason. It's just to get in, get a little something and get out, right? But you guys who are buyers into an idea of what a company might truly be worth, it still pays to utilize this method, because you might go, well, I did miss the initial pop. I owned some. Maybe you're like the guy who's like, I owned some here. I was already in this. I was here back here, at $4. And then I sold in the initial pop. Maybe you're one of those people who are really good and you're like, I'm selling on that open pop. Boom, you're already in. You made 50, 60%. So 50%, boom, I'm in. I'm out. Boom. Done. And now you're like, but I kind of want to get back in. I did like holding it, but I knew that was a good time to sell. Well, then there's your aim right there. It's in that range. It's a 4 on accident. I didn't mean to draw the 4, but The point is that when you utilize the lines like that, then what you're doing is you're actually buying in with the algorithms. So it doesn't become some mechanism of action that's based on a human being's belief system of where something should be valued. It's actually according to averages that computers are using to build their algorithmic play. So computers are buying here. That's where they're buying. Computers are selling here because that's way outside of the Bollinger Bands right at the start of the day. They're going to sell it down on purpose. And you get in a position, remember, you get into a position where often you get emotional because you want to chase it. And that's why I say, just don't. Most of the time, just don't. Sometimes you can, and it pays off. I get it. Like some people have had 200 or 300% gains after they chase something. But the majority of the time, probably 80% of the time, you're going to lose money chasing because you just played a very emotional play that these guys were counting on people playing. And you're just the one they're peeling their shares off to. So I would always suggest looking for this beautiful swoop right here as well. Now, you never truly see the swoop is coming, okay? What I mean by that is when it's dropping, it's not like the swoop is forming. It actually forms these lines and they start to flatten out. Sometimes it almost look like they're going to go like that, which sometimes they do. If they do that, you're in trouble because that's now building a downtrend and they're going to actually fall through that and start going like this. And then it becomes a downtrend very fast. But one of the things you can do is once you just make a decision to buy on those lines, you hold it. Try to be patient. Consider yourself like if you lose, if you got like a 3% loss, cut your loss. If 4% loss, make a decision like if I'm down 3-4%, I'm cutting my losses. And just hold if that doesn't happen. And then what happens is if you hold and it doesn't happen and you find yourself bouncing in between no gain and like down 1%, up 1%, then what will happen is sooner or later it will make a move. And when that move takes, after just one candle, you will start to see that swoop begin to happen. And what it looks like is looks exactly like that divot right there. See that right there, how it goes up? Then it goes down, and then it does that. And you'll see that. Look, it does it there, and it does it there. And that's the ones you want to see, because if that swoop forms, look at it here now. Look at how beautiful that looks. That kind of proves I should have held into the end of the day, because the swoop was so beautiful. But let's look at another stock, IFRX, that also had a swoop. They had the swoop, and they did same exact thing as CEMI. Look at that. Absolutely stunning swoop. The swoop was perfect. The drop. So I would have gave these people the same exact advice. I actually think I was giving that advice in the beginning of the day at some point, but I almost forget. But if you look right here, it was the same thing. Got way outside of the Bollinger Bands, which is that line right there. Once it gets there, a lot of selling takes place in order to drive it back. So if you were a person who wanted to chase IFRX, you would have got slaughtered in the morning. If you chased and bought at the top, it would have never reached your price again for the rest of the day, and may even collapse more tomorrow. We don't know. But one thing's for sure, if you would have been patient and did what I said on the CEMI, you would have actually targeted a fantastic position, because look what happened. It literally bounced in almost the same exact spot right between the green and the blue, and it came back up. So you're looking at this pattern exists time and time again when you're looking at daily pops. When you look at daily pops, you will always see if something doesn't continue to run and it has that decent drop, then you know the drop will most likely take place down into the EMA lines, in which averages then start to clear out the sellers, because now the average price becomes strong. I mean, the average price, that maroon line right here is the average price now paid per share over the last 5 days. The green line is the average price now paid over the last 7 days according to volume. And then in addition to that, the blue line is the 9 days, last 9 days. So when something comes down to the 9-day line, like right here, 7 people were like, hey, that's the average for 7 days. I'm ready to buy. I'm actually getting it cheap compared to what it could be according to volume and price over the last 5 days. And so when you look at that, you see the same exact shape that we saw with CMI. I drop down to it and look at that swoop. And there it is, that beautiful swoop right there. When you see those swoops taking place, often it's benefits to just take a little risk and go into them. But the main objective, if you can do it, is set your price to buy, meaning an alert. You don't actually just don't set an automatic buy and you're not watching it, because remember, the lines change so much that a massive drop could take place because you don't know. They could have an offering. They could be on their way down, and and then suddenly an offering. Like, you never know what could happen. And so one of the things I always say is set an alert. Then after your alert goes off, go in to buy it. Now, I did actually have a buy for APRN today because I saw a trend line in addition to the middle Bollinger Band. So I'll quickly touch on Blue Apron and why that was a catch for me. And I actually ended up selling it into the end of the day because I didn't want to hold it. I just didn't want to hold anything, even though but this is what got me. If you actually draw this out, this is what got me. And remember, I'm going to show you this in my book, but it didn't touch the line. But to me, it was so close of a touch, I felt whatever. Because it was so close to the trend line and also touched one of my other favorite lines. See right here? Go right there and bring that up so it touches everything. And look at how close the touch was there. You see how close that touch was right there? I mean, it was so close. It was within, 15 cents. So I figured I would get in, and this is why. Because it was a very bullish day today when the market was red, and I saw it bouncing off this red EMA line. I mean, for this red Bollinger Band. That's the middle Bollinger Band. And so when you go into your Bollinger Bands, let me show you something. When you go into your Bollinger Bands, see this right here? If you go right over here, and you click that. Now, this is TD Ameritrade. But if you go right there, I would love, you know what I would love if people do? Because I never ask for money or anything for the things I show people. I hopefully help people, and I give them a lot of information. It's very hard to learn if you have to learn it on your own. And I see people on StockTwits all the time. They have more followers than me. They don't explain shit, and their calls aren't even that good. They literally just like go into 15. They don't give you a reason why. They have no fucking clue. They're just pumping shit up because they've amassed a massive following, and they're just pumping shit now. But if you look at this, one of the amazing things about it is if you go into where those gears are, you get into your indicators, and it's such a basic thing. You do it right from your phone. You can see the indicators right there. You can actually go to indicators, frequency, and then from there you get a lot of what we need, okay? So indicators, frequency. If you open up the indicators tab, which I'm clicking right there, as you can see, did you see that? You just click on the indicators tab, you get a lower chart, upper chart. Now, lower chart would appear below the chart that actually has the candles and everything. In this case, it would be the chart down here, whatever appears down here. In this case, I have the RSI, which is always, RSI is useful. Sometimes I don't even use it, but it is useful. And then in addition to that, what you have is the indicators tab. The right side, which is the upper chart, and that's everything that you see, all the lines and stuff. Now, as you see there, I have the Bollinger Bands and the EMA selected. So if you just click, in my case, it's on the right-hand side right here, the little eyes. And then what you do is, that's just, I stands for input. And that's just so you can change your inputs. In this case, if you open up Bollinger Bands, you see a deviation of 2 in a period of 20. Now, what that means is it will be over a period of 20. And the Bollinger Bands utilize the same fundamental rules as the EMA, utilizing volume, price, and all that stuff to tell you when something is expensive or not. But it does it on 3 levels. So it has the middle, which is a 20. So that's what the period stands for, 20. So if you were to actually set your 20 in EMA, if you were to set your EMA to 20 and your Bollinger Band to 2 and 20, your EMA 20 line would nearly match perfectly, if not absolutely perfectly, your middle Bollinger Band. Okay? Now, in addition to that, the deviation of 2 simply means deviation of 2, 1 up, 1 down. So if this line shifts up, a 1 up, down, or a 1 up and 1 down, then that gives you a range of what is now considered expensive and cheap. Okay? Which is statistically very important. That's what statistics do. They give you a deviation with a standard deviation of however many. This is literally for analysis purposes. So when you look at that and you find out that something's hitting the top of a Bollinger Band, then for the most part, it is expensive. That doesn't mean that it's going to drop. Because I talked about that with Blue Apron, and we're going to go into that in a second. I don't want this to get too long, but we are going to have to cover that for a second. But with the EMA lines, you see it like this. It says line 1 period, line 2 period, line 3. I have the 5, 7, 9. Sometimes I use 6, 8, 10. And in very rare cases, I'll throw the 20 in there, which I don't, 13 in there or 20 in there. But I stopped doing the 20 now because I use the middle Bollinger Band of 220. All right, so let's take a look at this. So now we have that, right? We have this basic setup, but the EMA lines are very, very useful for day trading and in terms of stuff that's hot, stuff with high volume, stuff that just popped that day, stuff that popped big in the morning is now dropping, stuff that popped hugely, like up 120% a week ago, and over 5 days it's just spilling. You know, you can learn a lot from that stuff. And so let's take a look at Blue Apron and why we see what we saw in it. Okay, so we saw that touch to the middle Bollinger Band right there. Right there. See how it started to touch that? And look at how many other times. Look what happened here. Watch. Touched it there, touched it there, touched it here, and fell through it. But all those throws, and then look at that line. It's essentially, I mean, for the most part, almost a straight line through them. And that's why I set the price to, once it broke through that red line, you know, to have a limit. So it was a limit buy to market. So as soon as it reaches my price, buy it and then go to market and buy for whatever, and you'll see you actually saw the price jump. I only bought 100 shares of it, but it showed you how I got some for $12.86 and some at $12.89. It's because at $12.86 I got like 65 of them or 75 of them, and I had to buy the rest at $12.89 because it's limit to market. So it gets my price, but doesn't allow somebody to feed me just 3 shares of it and then try to make me chase, which is what the problem is with limit. And by the way, I almost always sell at market. Almost always, like 95% of the time I sell at market. So there you have for that. Now let's watch what happens when you change this, right? This is where it gets crazy. Look at the 1 day. If you were looking at the 1 day chart, that price would have seemed like a total collapse was going to happen. Look right here. Falls down, boom, up, and then down through it and falls under all the EMA lines. Look at that, which obviously can be a very bearish thing. To just be under all of them with that pressure. See that pressure? That creates pressure, because now that means that the average price is dropping, which makes people not necessarily want to buy it because they get cautious about, well, what is a cheap price? It's below all of them and it's still dropping. So what is cheap? Is cheap $12.50? Is cheap $12? Is it $11.50? And that's why it's so important to go from that to the 1 day. Now there's something else that's very important that a lot of people don't consider. The frequency, which is this over here. Did you see that? It's that box over there. This right here is your frequency. And what frequency determines is, what do you want the candles, which are these things. These are your candles right here. Every one of these lines, that one there, that one there, that one there, that one there, there. What do you want those to be worth? Do you want them to be every 1 minute you have a candle, every 5 minutes, every 15 minutes, every 30 minutes? You know, you have to determine what you want those to be. And in this case, because I'm looking at the 1 day, my frequency is for 15 minutes. So every candle is equal to 15 minutes, not 30 minutes like Clay Trader uses, whatever the heck his name is. Clay Trader, I think. He uses every 30 minutes on the daily. At least that's what he says in the video. Every one of these candles stands for 30 minutes, I believe. I forget. I never watch his stuff, and I hate the guy for the most part. Not hate him as a person, I just hate how he teaches stuff. It's so bland and lame, and I don't know. My friend, my buddy, Prize Possessions. I mean, that guy like texts me every day. He made like $4,000, $5,000, $6,000, something $9,000 a day. I'm like, Clay Trader. These other guys. I mean, that guy, Prize Possessions, blows me the fuck away. Like, I'm shell shocked every day. This guy's making thousands of dollars. Like, I see people who have chat rooms. By the way, I taught this guy all the stuff he knows. I like, not all of it, but a lot of what he knows, which blows me away, because I'm like, dude, you're getting rich and I'm getting poorer. It just makes me laugh, but I love him because he just grinded through till he learned this stuff. Had lost so much money and he just grinded it out and then learned it, and I just love it. And I tell him that all the time. I love that you're this way, bro. I love that you're benefiting from the things I showed you. And he's just killing it. And you see these people with chat rooms, and they're making, like, this is my average, this is my return for the last month, 15,000. Like, there's some guy, I see him, he's always bragging. Bro, my boy made like $127,000 in the last 30 days. Just destroying. I've seen him go down 7,000 a day, and then he texts me at the end of the day, sends me. He always shows me his account, his real account. He never bullshits. He doesn't even tell you guys. Like, he doesn't show that stuff on StockTwits, which is why sometimes I don't like to share it here, but it just blows me away because I love to see it. And all he's using is literally the things I'm showing you now. He often inquires with me before he makes moves. Hey, should this, should that? And then sometimes he doesn't listen, and he could have made hundreds of percent, and very recently 1,000% off the TVIX. Should have listened to me, my boy. And it's back down now, though. All right, so here we go. the frequency 15 minutes. And then if you change the frequency, you'll notice the whole chart changes. Now watch what happens. Take a good look at the chart right now. You look at that right now. See how it looks? Change the frequency to 5 minutes. Boom. Look at how sloppy that is. It doesn't tell you as much. I don't care what anyone tells you. It does not tell you as much. And a lot of day traders use like 1 minute candles. I can't do it. I just can't do it. Doesn't. Now look at the 30 minutes. 30 minutes is also fairly good. I see why Clay Trader can use that. See how it came there to the middle band and then popped up strong? So I kind of see why he does it. I get it. I totally get it. Right there, from there to there. I mean, that's 14, went to 14. So I get why it could be useful. But I like the 15 minutes because I have my 5-day set to 30. See my 5-day? When you go to 5-day, now that's set to 30. So I can always go to that and then see how that gives me the same view the other one gave me. So the 1 day gives me a more intricate view of the swoop. So I can see swoops forming sooner with the actual, 1 day chart. But with the 5-day chart, I can also see the swoop forming because it's a 5-day period now, but I also see the touches. And remember what I showed you? I showed you how I was able to draw the trend lines and I reacted because of the 5-day, which is the 30-minute candles here. Now, when you go to 1 month, I still have 1 day candles for the 1 month. See, if you go to frequency, it's 1 day. So each candle is for 1 day. And this is where I see a lot of strength. See how I see that strength there? See that strength? It's just riding those bad boys because a lot of people are going to be ordering food from home. They can't get out. They can't do anything. So you see it staying above the EMA lines. It's just staying there. And a lot of times you obviously get a reaction where it swoops up. You're kind of seeing that swoop forming. You're kind of seeing it form. You see how it's kind of like going like that? And what it likes to do is that. And that's where I kind of see that 17 range as being a possibility. Now let's go. I mean, it could collapse tomorrow, guys. I'm just saying, like, when you technically look at it, because this is one of the things that kind of worried me. Remember the 3 month? Now look at the 3 month. See how you can see an even stronger part of that swoop? Because it's a longer period of time, but the same days. So now it's in such a small area, meaning that last month is just in such a small area. And now look at that swoop. It's like this. It's literally almost like a U now, right? If you're drawing the baseline of the drop. And then finally we get to the 6 month. Now this is where the candles change. If you open up the settings here, the frequencies now stand for a week. And this is where I was like, this is a short squeeze. Because this is the top of the Bollinger Band. That's the top of the Bollinger Band right there. And this thing went flying through it, absolutely collapsed. And where did it drop to? Directly down to the Bollinger Bands. And then now it's going back up. And now, because that's a weekly, every one of those candles is worth a week. So that there tells me short squeezing going to continue to take place until something changes. In fact, it's more like as it stays on top of the Bollinger Bands on that 6 month to 1 year chart, which they have the same settings, 1 month and 6 month. I mean, forgive me, the 6 month and the 1 year both have 1 week candles. See how the chart's the same? It's riding the Bollinger Bands. That tells me that the squeezing will continue to take place. And then if you look at that $17 range, look what's up there towards that $17 range. And that $17 range, realistically, right here, right there, is where that top was right there. Now, you're also going to have some resistance right there, $16.39, no doubt. Because if you go all the way over to here, you can see that was a line that was very hard to break. Just like if you draw a line straight from here. Look, draw a line straight across here at the top of this one. Go straight across and look what you get. You get the top of that one and you get a breakdown below that one. In fact, let's pull the line so you can actually see how straight it is. Let's do it like this. We'll pull in one of these. We'll make it a flat line. Make it like this. Now watch this. Pull this to the top of there and look at, now you can see, because my drawing wasn't that clean. Look at that. Absolutely. Hold on. Matter of fact, let's extend that out. And you would not, by the way, you would not be able to see this if you did not have the chart selected the way I do. Now look at that. Now you have a touch there. There. Meaning now, it's support here. It's resistance there. It broke through heavy there. Dropped all the way back through. Became resistance here. And now it's right sitting there in that range. When it broke above it, it fell back below it. Meaning this is a very crucial line. And that line is sitting nearly exactly where it's at. It's sitting at 1350, 1360. So isn't it funny the day ended there? Because it's a tough line to break. People don't think it can hold. People don't think it'll sustain. People don't think it can break. So it's a tough line. You got to get past that. And once it gets past that, 1636 becomes the next problem area. But when you go out to the very long-term 5-year chart, which I tend to use lately because you do see a magnetic effect, meaning sometimes when you look, you're like, oh my God, like this line is literally pulling stuff to it. It's almost mind-blowing. You're like, holy shit. Like it's actually pulling it to it. And here you can see that. If you actually see right here, and I've seen it with so many. I saw it with Cala. I saw it with Kodak. I saw it with Sava. I saw it with so many different stocks that I was just consistently pointing. SRNE, Sorrento. I was like, look, guys, all these long-term charts I was pulling up like 3 months ago, and they were just one after another, after another, after another, burying themselves into this middle Bollinger Band. And people were like, holy shit, this thing actually works. And this is what's crazy, is these candles are worth 1 month each. 1 month. Okay, 1 month. Which is, look where that's at. That right there, that line, that's at 17. That's at 17. Watch, you're going to draw it right there, line it up, see right there, boom, 1760. Okay, 1790, 1760, 1730. So you're looking around that 1730, 1750 range where it's going to get tough. Now, one of the other things you want to do is if you take that line and we do what we did before, and I'm so sorry if this is getting long. I hope you guys are learning something. I really do apologize if you're not. But I'm trying to show you how to perceive things in different time frames, different levels, different frequencies. All this stuff is very evolving, and it treats you this is why they have, this is my boy Trill. Pizza's here. Love this guy. Fucking Trill Digital. He's the one that made the beat that's playing in the background. I just love this guy. He's so smart. Just an awesome dude. He's my partner here at the studio. Just an all-around amazing guy. Sick with the camera. Some of the videos this guy does. This guy has amazing videos, dude. You got to see the videos he does. He shoots commercials here at the studio. All right, so boom. Look at this. If you draw that across, look what else that coincides with. Look at all this here. And this is before this massive collapse, right? Before this collapse down to the $4 range, all that nonsense. Look at where that was. That was a resistance line then. So you sure as the hell better believe it's going to be somewhat of a resistance line now. This was just an unbelievably massive short squeeze. Okay, of course. I mean, you're dealing with a stock that has what? Let's take a look. What is the shorts? 41.53% short interest. How many shares outstanding? 13.27 million. Not so bad. Hey Siri, what is 13.27 million times 0.415?
13,270,000 times 0.415 is 5,507,050.
I mean, you got 5 million. Let's see. Okay, so what's the average volume per day? So today the volume was 6.7 million. So you're looking at, it would be like the amount of shares short would essentially have all been covered today. And we know that's not true because the short interest probably grew heavily from here to here, because here everyone was like, I'm down, $2 was the low. A lot of them probably covered down that range. Then it flew all the way back up, got squeezed tightly to 28.84. You got to imagine a lot of those people came back and shorted the shit out of it again. So the full extent of the squeeze has not taken place yet. It just has not taken place. We're 1 month. This is literally 1 month, 6.1, because it's the 1st of April, so 6.1 million volume today. All the shorts did not cover today, I promise you. Half that volume or more of that, half or more was people just coming in to essentially buy the news, buy the feeling, buy the situation with the market. So there's a great possibility this could get to 1630, have a fight there. That 16 range I was showing you with the resistance on the shorter term range. And then the long-term range, there is that potential to touch right there at that 1750 range. We'll call it 1730 to 1750 range, which is the middle Bollinger Band on the 5-year chart with 1-month candles. And so there's surely a possibility with that high of short interest. I mean, just so many people short. Almost half of all shares short of the float. That's crazy. So that's where I'll end it. Actually, I'll show you one last thing, and this is just to show you something. The 5-year, looking at the Dow Jones, you do have a megaphone very clearly forming here. This could be problematic because I mean, to be quite honest with you, this isn't a guaranteed bottom. I mean, you know, you just, that megaphone bottom there was touched back on, you know, right there. Look at that. So there's some open space there for that to come right back. Actually, that's not even fully. Let's really get this thing where it needs to be. Actually, I mean, maybe that was a touch. Hold on. Let me zoom back out. Bring that into there, right about there. I mean, this would be right here. So yeah, I mean, you're looking at potentially a drop to there. And this is that range they're talking about. This is a crucial range because this is like the mother of all support lines here. The people have been calling it that. I mean, Nigo Magora has a pretty good article, and it's this right here. It's right in that range right there. You see it? You see how, look at how it's been the support for so long. You know, it held up all through there. It was resistance there. It was support there. It was just this major line that propped up the market until proper, you know, recovery could take place. That was the 2016 elections there. And then look as it extends to over here. That would be the downward trend line, the horizontal trend line breaking. It would be very problematic, and it could be crucial to this thing recovering. If it cannot hold that line, it could be very problematic. And we might be looking at, you know, 16,000 or below Dow Jones, which should be very bad. So let's see what happens. Hang in there. Try to learn as much as you can and try to be in and out like I am. You guys see me. I'll take $1 where I can get it. I'll take 20 cents where I can get it. I just take what I can get, and I'm trying to be that way. I'm trying to be proactively moving. And the reason why is because I can take something, you know, and just not get trapped somewhere and have to wait for the bottoms to take place. So I hope this is helpful. I'm going to go eat some pizza. I love you guys. I might get back on here, do another video, but this is a really long one and there's a lot to learn. So hopefully it taught you something. All right. Love you guys. Peace.